I looked around at other places, Vietnam and other places as well. The tigers tend to fit around the 60s to 80s. China and India are kind of in the high mid. There are a lot worse places to do business in the world, but they're not easy. Now, how they calculated these, they looked at these factors. The number of procedures to start a business, the typical time it was required to start a business, and the typical cost of starting a business. Now, the cost of starting a business they gave as a ratio comparison in that country. So if you're from the east coast of China, you may have a lot more income than somebody in the interior of China. That means that this number is a little skewed. People in the east coast will actually have an easier time. East coast, west, whatever. People in the east coast will have a slightly easier or somewhere like that. So they looked at all these different kinds of things, but notice what they don't have. They don't have market size. They don't have other things that we'll talk about in just a minute. But I did want to just show you some of the things that came up in terms of the responses. These are based on surveys of business people, right? So the number of procedures required to start a business. US and Japan, 6.8. OECD average is 5.8. And you have considerably more than you have to do in China and India to start a business. The number of days required, only 6 days in the US versus 3 weeks in Japan and more than a month in China and India. Employment rigidity. This is how easy it is to hire someone, how easy it is to fire someone, and what kind of flexibility you have in setting the working hours. The less regulation, the lower the number. So India and China are both regulated, but the entire OECD is regulated. The credit information, whether you get more information about a potential investment. This is the kind of information that's available to a potential investor. So the US and Japan showed up well. India and China didn't show up quite so well, but they're not that far below the OECD average. This is where you really run into differences. The days required to enforce a contract. Less than a year in the US and Japan, more than a year in China, and way more than a year in India. Also, the cost involved. Now, I think one reason the American cost is so low is because the size of the awards are so big. If you sue someone for $50 million and it costs you $5 million to process the lawsuit, okay, that's 10%. However, if you're suing somebody for, $2 million and it costs you about $5 million, then what? You're about 40%, somewhere around there, 20%, whatever, of the cost of enforcing. So part of this has to do with the size of the claims that people may get out of the legal system. But that's how they were coming up with the ease of doing business. Think about this for a minute. Does anybody pick a place to do business because it's easy to do business there? Maybe a bank, right? And maybe a trading company where all you're doing is importing and exporting. But most of the time, we pick businesses for locations for other reasons. Especially if you're starting a company, you need someone who's going to invest in your high-risk area. Because whatever you're doing, since it's new, is very high risk. This is individual investors, the people we call angels. This is venture capital firms. It may be banks, microfinancing opportunities. So if there is high-risk venture capital, if there is high-risk capital available, then that's a good thing to be an entrepreneur. What about the kind of people you can get to work with you? That's a huge issue. Not only are people well educated, not only are there, whether or not there are experienced managers in the workforce, will they go to work for a startup? Now, in that regard, Japan would score pretty low. Korea would score probably lower than it did a couple of years ago. Because my sense is that people are kind of pulling back the spirit a little bit. But the point of it is, are they willing to work for startup companies? It's hard anywhere. You get up your company, the first 5 people may all be students. But then when you need people who've got experience in the business, you need people who are 50 years old to come and work for you when you're 22, that's hard in many places. It actually happens here quite a bit. Pay attention to who shows up on startup teams. The difficulty of getting your early customers. This is an inverse proportion to brand value, right? The more brand you have, the easier it is to get customers, of course. So this is saying, if you don't have brand value, how hard it is to get customers. That's more difficult some places than others. The availability of mentors, I think, is a really important thing. Especially because we have a kind of tradition of mentoring here in Silicon Valley that is very sophisticated and very advanced. I'm very happy that I've been able to be the advisor for ASES for 11 years now. And so I'm used to it when I tell you I sold something that she doesn't really pay attention. That's kind of okay. Well, it's her organization, I'm the advisor. Of course, then again, I get to say, I told you so, or couldn't do anything, whatever happened. But mentors here know how far to push, whether they're venture capitalists, whether they're people working with the entrepreneurs, whether they're senior people advising from the outside. You know how far you can push. And the entrepreneurs know when somebody is just hard-headed, like, yes, we'll probably go some hard-headed, and when they really have something that they need to pay attention to. That's a very highly developed social relationship here in Silicon Valley. It's less well developed in other places, and especially in Asia, one of the big challenges is Confucian respect for age. Right? Just because somebody has been in the business for 30 years, they may not know what will work and what won't work. There used to be a wonderful slide about the venture capital companies here in Silicon Valley, the companies that they refused to invest in. So a lot of companies refused to invest in Yahoo before Yahoo started out. A lot of companies refused to invest in other companies before they started out. And so, you know, in Asia, it's especially difficult when experience almost leads one to be very hard to say no to a mentor like that. Sometimes it's better not even to ask, and then the whole mentorship thing falls off. What kind of alternatives are there for exiting, declaring victory and doing something, either selling your company to another company or selling it to the public, because that's what an IPO is. And finally, how does society value an entrepreneur? Are entrepreneurs suspicious people? Are they people who are not able to get a good, stable job with either the government or a big company? How does society view entrepreneurs? This is a big thing to overcome somewhere. It doesn't mean that you don't start your business, but it means you need techniques to overcome these challenges. So let's go look at Japan. To me, the first and biggest characteristic of Japan is a huge shortage of mentors. I talk about this mentor relationship as someone who's on the board of a Japanese startup company. I'm on the board of a national university. I'm also an advisor to 3 other companies.